If you have ever felt overwhelmed by the daunting tax time and find it hard to stay on top of your investment portfolio's true performance, then stay tuned as in this episode we will explore powerful strategies to simplify and streamline your tax reporting processes. Hi everyone, my name is Parul and welcome back to my channel Ask Parul. In today's podcast episode, I am thrilled to be joined by Mr. Prashant Mohan, who is a Chief Marketing Officer at Sharesight. Together, we will explore the powerful world of Sharesight for effortlessly managing your investment portfolio and simplify the upcoming tax season. So whether you are a seasoned investor or just beginning your investment journey, then stay tuned to discover how Sharesight's robust features can streamline your tax reporting, help you monitor your investments performance, and guide your financial decisions for a secure future. And if you are new to Sharesight and you're curious to know about its various features tailored for investors, then be sure to check out our detailed podcasts and live demo sessions. The link to those are given below. Stick around till the end for a special bonus, which is a unique link offering my subscribers an exclusive 33% discount on Sharesight's annual membership. And if you haven't already joined my community, then do subscribe to my channel, smash that like button, and share this valuable content with others. Your love and support fuels my passion to continue delivering informative content just for you. So let's grow together and let's dive right into the podcast. Stay tuned. I know we spoke about 6 months ago, but hope you're doing well. And thank you for coming back to my channel. It's really an honor to have you again.
Thank you so much, Parul. It's really nice to be back as well.
Great. So I think, Prashant, we'll just get started. I know it's almost the end of financial year. Of course, by the time this video is out for the audience, we would already be in the tax time, at least in Australia, because for general audience, the tax time in Australia starts from July until October. So I think, and I know we spoke last time that how Sharesight is absolute must-have for investors in general, but also especially during the time of tax file, because it can be so cumbersome, especially for a diversified investor. It would be really helpful to understand that for an investor, especially during this time, the peak season of tax filing, how is it relevant and how they can maximize and leverage the features that Sharesight have for next, few months.
Yeah, thanks, Parul. I think just to get through this content, I've created some slides as well as, so let me share my screen.
Yeah.
And, okay. I can't get to the next tab. Sorry. There.
That's all right. Yeah.
All right. So yeah, just a short little presentation, but I'll be swapping between the slides and going into Sharesight as well. So yeah, we're calling this Getting Organized for Tax Time. Just start with a little disclaimer. I'm not a tax accountant. I'm not a financial advisor.
Yeah.
So I'm just purely giving a product demonstration, and please consult with your accountant or an advisor for any of those, any particular investment related or tax related content. So welcome. Thank you so much again, Parul, for having me around. Just wanted to have a quick overview of what's happened at Sharesight since the last time we spoke, and then dive deep into the specific tax features that are extremely useful for investors at this time of the year. So just in terms of a high-level agenda, I'll take you through some of the tax reporting features, how to track income and capital gains tax, which I'm sure a lot of investors would have had. Even if you don't have capital gains, income tax is definitely a critical component. And then how to actually generate these tax reports. As Parul mentioned, some key dates. If you're an ETF investor in particular. So the key dates, if you're a general investor, of course, 30th June is the end of financial year, which means that's when all the books close. 12th September, so just an indicative date based on prior experience. If you're an ETF investor, there's something called an emit cost-based adjustment that happens, and I'll come to that in the demonstration. And then generally 31st October is the tax filing deadline if you're doing it yourself via the MyGov or the MyTax app. If you're using an accountant, you have a lot more time. So let's jump into Sharesight. I've got a demonstration portfolio here. And one of the things I wanted to show was what's changed in Sharesight itself and go through some of the reports. So this is just a demo portfolio. I've got a mix of global stocks and ETFs, domestic stocks, as well as some global ETFs and some alternatives, so Bitcoin in this case, and some cash and equivalent. So in this case, I've just created a term deposit that pays out a 5% interest, right? So let's jump straight into some reports that are extremely useful. What I wanted to show initially was the performance report. So let me just click into that. We've launched a brand new performance report, primarily in terms of the visualization. And if I just show you here, let me run the report. What this is going to bring up is a visualization of actually different holdings in your portfolio, as well as the performance of that holding over this time period. So in this case, I've just taken this financial year as the time range. You can change that, but I've just set this as current financial year. By the time you see this, it would be the previous financial year. So you have that for a choice as well. Okay, so let's see what this is showing in terms of visualization. So CBA has actually returned 32%. So that means for every $100 share, $100 of CBA shares you had, you got $32 in this financial year, which is actually a fantastic return. The green tick you see there is basically an indication that you beat the benchmark, and I'll come to the benchmarking in a second. So whatever is a benchmark, let's say you pick an ETF that's your plan B. This has actually beaten that particular benchmark. On the negative side, you can see Telstra has gone backwards for the financial year. And then you've got a range of things. So most of them are positive. So the good news is, as a whole, global indices have done really well over the last 12 months. Obviously, you cannot escape any news channel without hearing about Nvidia, so I won't go too much into that. The S&P 500 has been on a tear. The Indian market has done really well as well. So this is a
I think Nifty
particular.
has done really well. It
This
has
is
been,
a.
at an all-time high.
Yeah, exactly. So if you see, this is an ETF that invests in the Nifty 50. That's done extremely well through the financial year. So Australia has not done bad. ASX hasn't done too bad, but we can get into some of those details. And then this is just the visual representation of that. You've got all of your performance broken into capital gain, dividend gain, and currency gain, and you can toggle between monetary and percentage. So that's always been there. So that's still very valid. Now let's jump into tax reports, which is specifically the taxable income, capital gains, and historical cost report. So let me jump into taxable income. At the end of the financial year, all of you will receive the PAYG. It all automatically goes through to the ATO's portal. So it's all sitting there. Now, when it comes to your investment taxes, it's always good to have a source of truth, which is what Sharesight is. So you can see here for each part of your portfolio, you've got the date on which you received an income. So in this case, it's a dividend. Even if you have dividend reinvestment, it is still considered income. So just keep a note of that. whether you take your dividend as a cash amount or as a reinvested share, it still counts as income. So all of that is captured here. So you've got the total income, the net amount, and of course in Australia we have this concept of franking credits,
Yeah.
which is basically, let me take a slight detour and explain franking credits.
Yeah.
Which is basically, let's say you're on a particular income tax threshold, and so let's say you're at 40% tax. I'm just giving a random example. And what has happened is when a company declares profit, the company pays a corporate tax. So that amount is usually around 30% if it's a large business. So somewhere between 25 to 30%. Now, because that company has already paid tax on that income, and then a part of that comes to you as a dividend. Now, to avoid this double taxation, the government has created what is called a franking credit. So that means you will only be paying the difference between what has already been paid on that income and your personal tax slab. So if it is above the 30% mark, you pay the difference. If it is below the 30% mark or below the 25% mark, then that means the company has already paid more than your share of income, so you can actually get a credit back from the tax office. But again, definitely verify with your accountant when you do this. From a software point of view, we capture and calculate that amount at every individual step. So in this case, if it is an Australian held company and most of its revenue happens within Australia, then you get this franking credits. You do not get franking credits for foreign companies or if the revenues are made abroad. So a classic example is CSL. CSL is an Australian company. It's listed on the ASX, but you don't get too much in terms of franking credits or franked amount because most of its revenues are overseas. Whereas you take a BHP or a CBA, all the revenue happens locally.
In Australia, yeah.
And in Australia, same thing with Telstra. So you get more franking credits for those. So that's the general rule. If you go scroll down, you've got foreign shares like Apple, you will not see that in this. Now, when it comes to foreign shares, there's a different component which is called a foreign withholding tax. So because the shares are actually held in the United States, you record the exchange rate when a particular dividend was paid, but every dividend amount you get, you also the tax office withholds a certain amount of foreign withholding tax because that income is overseas and there is an extra tax on that. Again, all of that is comprehensively captured in Sharesight, and you can take this report to your accountant, or if you're doing this yourself, you can always cross-validate what the ATO has. The third component of taxes is with regards to your ETF investing. Now, ETFs are considered trusts in Australia, which have a different tax treatment to single held shares or a single company share. So what happens in a trust income is, again, it works exactly the same way. I've got like a Asia, which is all Asian tech companies. Part of it happens to be in Australia, so you're getting some amount of frank credits. The very popular one is the very popular one is VAS, which is the Vanguard Australia ASX 300. Again, that's you get the franked amount as well as an unfranked amount. You see this India ETF there. There is no franked amount because all the revenues are actually overseas, and therefore there is no franking credit. And when it comes to ETFs, there's another thing that happens is as a trust, all ETFs go through a certain amount of adjustments. Again, a slight detour. If you have bought an ETF and held it for the entire period, you've not done anything, you can still get a capital gains tax because within the ETF, some rebalancing happens.
Ah, yes. Yes.
So that ETF would have bought and sold some shares. Now,
Hmm.
if those shares have been sold at a profit,
Correct.
that attracts capital gains.
But I think that would apply more to, intraday trading, right? As compared to investors who usually are more long-term in nature.
No, even
Oh,
for long
really?
term in nature,
Okay.
because the ETF is doing the buying and selling as part of the rebalancing,
See.
the end customer
Right.
of the ETF still
Still.
can get a capital gains
Yeah.
uh, event. Let's put it that way.
Right.
So because of this, there's a lot of cost-based adjustments and
Mm.
income adjustments that happen, and that is relevant to the 12th September date that I mentioned.
Yeah.
So if you have a Sharesight account, uh, all that is done automatically for you
Right.
within Sharesight.
Of course, I can imagine it's so difficult, for an investor if to keep track of these micro level events, right? It's I think almost impossible, I believe. So you definitely need a tracker or a software that does it automatically for you.
That's exactly right. It's just even if you have an accountant, the accountant is going to ask you to bring
Of
all these
course. Yeah, yeah,
statements
yeah.
from, usually computer share or link market services. You take all that paperwork
Mm.
and then send it to your accountant one by one.
Right.
And I've heard in certain accountants, I believe they charge certain amount per ETF as
Mm.
the or
Yes.
per dividend distribution.
Right.
Uh, and again, it's also something that I've heard very commonly from our customers is like the conversation with your accountant becomes from a turn changes from a data gathering exercise to actual advice,
Of
right?
course.
Because if you go to an accountant, the accountant charges you for like 4 hours, 5 hours, whatever.
Mm.
Out of that, 80% of the time, just is data gathering. Oh, send me this detail. I want
Yeah,
this
I know, I
document,
know.
and
Yes.
uh, and that is the part that
Right.
ShareSite really simplifies for
Right.
you.
So
Yeah.
out of curiosity, Prashant, just I mean, and like feel free if it's not part of the agenda, but out of curiosity, I wanted to understand like which brokerage firms do you work with, like ShareSite works with in Australia and India and the US maybe, because I think predominantly a lot of the audience, especially on this channel, are from these three geographies. That's why I'm just focusing on, of course, feel free to talk about more,
Yeah.
but in particular, these three geographies.
Yeah, that's a very valid question. So the best way to check that is the brokers
Okay.
tab inside of ShareSite itself. And you can look at any you can search up any broker you want.
Right.
So in India, I know for sure. In Australia, it's pretty much every broker. So
Yeah.
that there's no doubt with that. In India, it's I know that we recently did
Zerodha. Okay.
Zerodha. There's also there's a whole bunch of Indian brokers as well, but Zerodha is, I think, one of the biggest.
Mhm.
So we've done that. In the US, again, like you've got the Robinhood and e-broking, e-trade, Alpaca is another US broker. So there's a number of
Mhm.
US brokers as well. So the best thing is to just search your broker name,
Yeah.
and if it's not there, just get in contact with our support, and they'll add support for that particular broker.
Yeah.
Uh,
Okay. Fair enough.
yeah. So yeah, coming back to some of the other tax reports, the other one that I spoke about was the capital gains tax, which again, when it runs, you'll start seeing. Yeah. So in this case, I've got I've only made three different cells, I think.
Mhm.
There's three different cells, and then there's of course a term deposit that I've encashed. Okay, so that's the scenario here. Now, for every single And all of these have been held for a long time, so therefore everything is under long-term capital gains. If you held for less than 12 months, then that's a short-term capital gain. So the implication of that I'll walk you through in a second. So you can also then do something called change sale allocation method. Now, Australia is one of the few geographies where this is actually allowed, where you can decide if you have multiple purchases of the same stock and you decided to sell, you can nominate which parcel of shares that you've sold. So that then falls into these methodologies. So first in, first out, last in, first out, you maximize gain, or minimize CGT. So you can do that either at a portfolio level or at an individual holding level. And that's something that you can visualize and run your own scenarios on Sharesight for each of your portfolios. So in this case, I've just taken the first in, first out. That means, let's say I bought two sets of BHP shares, something I bought in 10 years ago, another lot that I bought more recently. But because the shares from the old ones have long-term capital gains, then I nominate that those are the shares that I sold. And therefore, what that means is I don't incur the short-term capital gain levy, if you call it that. So the way that translates is if you hold any investment for over 12 months, you get a discount for 50% on that capital gain. So in this case, this portfolio has gained $6,000, $6,000 as long-term capital gains. And because it's a long-term capital gain, you get to keep 50% of that. So that's the way it all works together.
I believe, I mean, just by using shares, I am not too sure if somebody needs an accountant or, because that's what an accountant is going to do, right? Primarily.
That's right. Yeah, there's a lot of benefit of using. Even if you do use an accountant, it becomes a lot more
Lot easier.
straightforward
Yeah.
for them to, because all of these calculations are already done. Then it's just a once-over check,
Absolutely.
and then you can do that.
And I think the good thing is that I believe we'll come to the subscriptions and everything in a bit, but I think the good thing is that you don't have to keep paying the accountant for every consultation, etc. Rather than that, you have one single place which is, you can use it on a monthly or a yearly, whichever subscription
That's
you have
right. That's
taken. Yeah.
exactly right. Yeah. Yeah. The other one that one of my personal favorites is this one called the historical cost report. Now the name itself is because you've got a historical cost basis of all your portfolio, but this is particularly useful if you have an SMSF. Now, as part of an SMSF, you are always required to give a valuation of your portfolio at the beginning of the financial year and at the end of the financial year. So how does that work? So in this case, you can see that that's the entire portfolio. You've got an opening balance, and then you've got the opening market value. Now, and then you've got the quantity purchases, and then you've got the closing balance. So what the closing balance is actually how much that portfolio valuation is as of like 15 minutes ago. So what that does is that gives you a clear cut. You just need to take an export of this, take it into Excel or Google Drive or PDF or whatever you want. And you can give this to your SMSF auditor to actually evaluate, okay, that was my opening balance, that is my closing balance. And this is something that all SMSFs have to declare. And again, you can do this for all your assets. I know a lot of SMSF investors have property. You can actually put your investment property also into Sharesight. And because this is just a valuation report, you create a realistic valuation for it, or you just keep it at the cost price. and you can show that. So this is a really useful report from for those purposes as well. The last two reports that I'll go through, one is called the All Trades report, which is, as the name suggests, it's basically all the trades that you have done in this particular financial year. Now here you can see that a number of these investments are actually on DRP. So you can see that a lot of trades have been of reinvestments. There's one sell. There is one sell over here of Bitcoin. And similarly, the term deposit kind of matured. So I've got that. So you can take all of that and again share that with your accountant. Now, if it was a real portfolio, this is just a demo portfolio, you will also have the brokerage amounts. Again, I know some of my friends who are frequent traders, they use this report and then realize, oh my God, I'm spending so much money on brokerage. And again, like you can, as always, you can always export them to any of the three formats, Excel, Google Sheets, or PDFs. And this one other last report, which is really useful for tax planning purposes. So even if the FY24 is over, you can use this in FY25, which is basically a kind of a what if scenario of actually the current state of your portfolio. So the idea is you can offset your losses against any gains. It's called tax loss selling. And you can use this report to actually achieve that. So let's go through this report. And this is all unrealized capital gains. So that means at the moment, that's the market value of all of your holdings. And you can see there's a certain amount of CBA shares that have purchase date, which is in the short-term capital gain section. So that means it's less than 12 months old. So obviously that will attract a different level of taxation as compared to the longer-term capital gains. So you can use this to then see, okay, I've got all these losses. You can, if you sell some of these at the same time as some of these capital gains, you can offset the two. So if you scroll down here, so you've got some short-term gains minus any kind of losses that you have in the unrealized section. The same thing you can use with regards to your long-term capital gains, and then you can offset those as well. Again, this is just a report. You can take that, but for any serious tax planning purposes, please consult with your accountant.
No, definitely. I think accountants are the best person. And I think because a lot of tax things keeps changing also. So I think the accountant are most up to date with any change in regulations or everything. So definitely it's always helpful to be in touch with your accountant.
Yeah, absolutely. Just on that note, that's a really good point you just raised, Parul. If you want to just share your portfolio with your accountant, you can just do this portfolio sharing, and you can give your accountant a read and write access, or admin access, whatever you want. And that way your accountant has the exact same view of all of these reports as you have. So if you give read and write, you can then go back into each holding, and you can literally have like a conversation with them. Like you can go into the new holding page. You have these notes and files. You make your notes on what your thesis is, and then you can just save that against that particular holding. So another really useful feature to actually share all of this with your accountant.
Cool. I think this is really, really helpful. And I believe when we last saw some of these things, especially the performance report has changed, and there has been a lot of enhancements that have happened. So anything that the audience should keep an eye on? Any further improvements that are in progress over the next 6 months?
Oh, there's lots of things always
Yeah,
coming. So yeah, always keep an eye out. We'll
right,
obviously announce it on our blog and we'll
right.
also share it with you. So yeah, you
Yeah,
can hear it from Parul as well.
sure. Cool. And I think finally, is just in terms of the subscriptions and the packages, like, do you want to, not too sure, like, what else do you have to discuss? But if not, then we can quickly go through the packages and how people can get
Yeah.
access to Sharesight. Are there any special discounts or anything
Yes.
which my members can avail?
Yeah, that's a really good point. So if you go to this particular URL, you will
Yeah,
get your special offer for all of Ask Parul subscribers and followers. You get 4 months off, which is 33% less compared to if you were paying monthly. So this is on an annual subscription. So this is a really attractive offer for your followers.
yeah. So in general, what's the cost comparison? Like if somebody has to pay monthly versus annually versus using, my link, like what kind of cost savings can they
Yeah.
foresee?
So we have three plans, three paid plans. So obviously there's a free plan which is there, but the paid plans are generally in Australia. The Aussie dollar values are 19 for the starter plan,
Yeah,
29 for investor plan, and 49 for the expert plan. So these numbers are if you pay an annual number. So these times 12 is the annual price.
yeah.
Uh, Now, if you use this special link, the way it works is you get an extra. So it's a bit hard to calculate on
That's
the
fine. I think
uh,
I'll do the numbers, but of course, people will get much better
much better if you
cost.
go through
Yes.
this. Yeah,
Okay, perfect. And I'm also reading that Sharesight might be tax deductible, is it? So
that
is
is correct.
Oh,
That is
wow, that's
exactly right.
amazing. So basically, we can offset that against our income
You
when
can
you're.
definitely put that against
Okay.
your deductible expenses
Wow,
because it's
that's
part
that's
of
good.
managing your investments. Yeah,
Yeah, so just like, you can deduce if you've paid to an accountant, similarly, you can also put this one.
exactly. Yeah,
Right. I think that's definitely helpful, especially, for because there's an added cost, not the cost, but the tax benefit that they are getting actually.
exactly right. Yeah.
Amazing. So I think I would really encourage the audience, please definitely, given its tax time, it can be very, very complicated to manage so many different offerings. Please go and use this. I have used it myself, so I can definitely vouch for these services. And I haven't, frankly speaking, personally, I haven't really seen any portal, at least in Australia and maybe even overseas, uh, which does all this consolidation in one single software or a tracker which is so easy to use. So I think it is for me, I've definitely felt that it's very convenient, and I'm hopeful that the audience shares the same sentiments.
Yeah, no, I think you'll definitely find a lot of value for that. And
Yeah.
thank you for putting all your content together, Parul. Yeah, really useful stuff all across.
Thank you so much, Prashant. Any last, you just have a minute and then we'll close. Any last comments or anything that you would like to share?
Yeah, just the fact that, it's I always like to say like Sharesight is like your Fitbit for investing.
Of course.
So it's yeah, no matter how you go and where you work out, whether you walk, you run, you play, doesn't matter what asset class you have, you can track all of it in Sharesight and
Yeah.
just give it a go. It's free to sign up.
Amazing. I think thank you so much, Prashant. I think it's been a very, very insightful episode as always. And thank you everyone who has watched this. If you need any further details, then definitely reach out to me. Or if you want to reach out to the Sharesight team, you can do it directly. And until we see you the next time, thank you so much and goodbye.
Thank you, Parul. Cheers.